Hello guys, I welcome you to our channel Global Tech on Tube with our series of clean verbatim videos for standards set by standard setting bodies for accountants across the globe. I can just switch you towards the video. The standard outlines the accounting treatment for most types of property, plant and equipment. Property, plant and equipment is initially measured at its cost, subsequently measured either using a cost or a revaluation model, and depreciated so that its depreciable amount is allocated on a systematic basis over its useful life. IAS 16 was reissued in December 2003 and applies to annual periods beginning on and after 1 January 2005. And we're just going to go through the scope of the objective of IAS 16, scope, recognition, initial measurement, measurement subsequent to initial recognition, the revaluation model, the depreciation applicable to both cost and revaluation models, and recoverability of the carrying amount, and derecognition and disclosure. So just moving ahead and talking about the objective of IAS 16 is to prescribe the accounting treatment for property, plant and equipment. The principal issues are the recognition of assets, the determination of their carrying amounts, and the depreciation charges and impairment losses to be recognized in relation to them. So you have to keep in mind there are the four aspects or the objective of IAS 16: recognition, determination of the carrying amount, depreciation and impairment. Scope: IAS 16 applies to the accounting for property, plant and equipment except where another standard requires or permits different accounting treatments. For example, assets classified as held for sale in accordance with IFRS 5, not current assets held for sale and discontinued operations. Biological assets related to agricultural activity accounted for under IAS 41 agriculture. Exploration and evaluation assets recognized in accordance with IFRS 6, exploration for and evaluation of mineral resources, and mineral rights and mineral reserves such as oil, natural gas and similar non-regenerative resources. The standard does apply to property, plant and equipment used to develop or maintain the last three categories of assets, that is the assets classified as held for sale, biological assets, exploration and evaluation, and the mineral rights and mineral reserves, all four except the first one, which is assets classified as held for sale. The cost model in IAS 16 also applies to investment property accounted for using the cost model under IAS 40 investment property. The standard does apply to bare plants, but it does not apply to the produce on bare plants, IAS 16.3. Talking about the recognition, items of property, plant and equipment should be recognized as assets when it is probable that IAS 16.7 it is probable that the future economic benefits associated with the asset will flow to the entity and the cost of the asset can be measured reliably. This recognition principle is applied to all property, plant and equipment costs at the time they are incurred. These costs include costs incurred initially to acquire or construct an item of property, plant and equipment, and costs incurred subsequently to add to, replace part of, or service it. IAS 16 does not prescribe the unit of measure for recognition, but constitutes an item of property, plant and equipment. Note, however, that if the cost model is used, each part of an item of property, plant and equipment with a cost that is significant in relation to the total cost of the item must be depreciated separately. An initial measurement: an item of property, plant and equipment should initially be recorded at cost. Cost includes all costs necessary to bring the asset to working condition for its intended use. This would include not only its original purchase price, but also cost of site preparation, delivery and handling, installation, related professional fees for architects and engineers, and the estimated cost of dismantling and removing the asset and restoring the site. And after the initial measurement, you have to keep in mind what are the measurements subsequent to initial recognition. IAS 16 permit two accounting models. First one is the cost model and the other one is the revaluation model. The cost model is carried at cost less account of cumulative depreciation and impairment, IAS 16.30, and the revaluation model is carried at a revalued amount being its fair value at the date of revaluation less subsequent depreciation and impairment, provided that fair value can be measured reliably. Talking about the revaluation model, under the revaluation model, revaluations should be carried out regularly so that the carrying amount of an asset does not differ materially from its fair value at the balance sheet date. If an item is revalued, the entire class of asset to which the asset belongs should be revalued, that is IAS 16.36. Revalued assets are depreciated in the same way as under the cost model. And talking about just at the end, depreciation and recoverability and disclosure. Depreciation, cost and revaluation models is applied on both models. The concept of depreciation for all depreciable assets, the depreciable amount cost less residual value should be allocated on a systematic basis over the asset's useful life. The residual value and the useful life of an asset should be reviewed at least at each financial year, and if expectations differ from previous estimates, any change is accounted for prospectively as a change in estimate under IAS 8. The depreciation method used should reflect the pattern in which the asset's economic benefits are consumed by the entity. A depreciation method that is based on revenue that is generated by an activity that includes the use of an asset is not appropriate. Now I'm talking about the recoverability of the carrying amount. IAS 16 property, plant and equipment requires impairment testing and if necessary recognition for property, plant and equipment. An item of property, plant and equipment should not be carried at more than recoverable amount. You have to keep in mind. And recoverable amount is, what is the recoverable amount? Recoverable amount is the higher of an asset's fair value less cost to sell and its value in use. So recoverable amount is whatever is the higher of the fair value less cost to sales and its value in use, that will be the recoverable amount. Any claim for compensation from third parties from impairment is included in profit or loss when the claim becomes receivable. And derecognition, retirement and disposal, an asset should be removed from the statement of financial position on disposal or when it is withdrawn from use and no future economic benefits are expected from its disposal. The gain or loss on disposal is the difference between the proceeds and the carrying amount and should be recognized in profit and loss. If an entity rents some assets and then ceases to rent them, the assets should be transferred to inventories at their carrying amounts as they become held for sale in the ordinary course of business. And when talking about the disclosure, this some bit of the disclosure about each class of property, plant and equipment that is of basis for measuring carrying amount, depreciation methods used, useful lives or depreciation rates, gross carrying amount and accumulated depreciation and impairment losses, reconciliation of the carrying amount at the beginning and at the end of period, showing additions, disposals, acquisitions, and fair much of the other heads. And additional disclosures, the following disclosures are also required: restrictions on title and items, and also the expenditures to construct property, plant and equipment during the period, and contractual commitments to acquire property, plant and equipment, and compensation from third parties. And at the end, we talk about the revalued property, plant and equipment. If property, plant and equipment is stated at revalued amounts, certain additional disclosures are required. That is the effective date of the revaluation, whether an independent valuer was involved. For each revalued class of property, the carrying amount that would have been recognized had the assets been carried under the cost model, the revaluation surplus, including changes during the period, and any restriction on the distribution of the balance to shareholders. And I hope this video will help you. The purpose is just to help you out, guys, to get the details about the standard just in a brief time so that you can check it for the MCQ section of ACCA. You can apply it randomly to any scenario question that is normally come up with ACCA in F7 in financial reporting, corporate reporting, and also the some of the aspects of audit as well. But just considering it as a part of education purpose program, we are helping you guys just to build an understanding of accounting and finance by getting just a preview of the standards and its application wherever it would be applied during the whole course of ACCA qualification. We're going to help you out, just get the understanding. You can comment, you can comment about how we should do it better, so that obviously it may help the students at the end of the day to get most of it from the video. So I'm just going to end right now, and hoping that you're going to work with our channel to improve it, with our channel to help us out how we can actually build it better. And also just on a second thought, the video or the channel is recently we came across the ACC recommendation that a dual identity is necessary to work as an accountant or as a professional of finance personnel. So what we are doing, what we are helping the community, what we are helping the public in large, just to get the understanding of accountancy and finance, just to equip yourself with the latest information and also with the updates, whatever it is, whether it is about standards, whether it's about any course of ACCA. We're going to help our students and in public in large just to get latest updated information, so that obviously at the end of the day we can help improve ourselves together. So I'm just going to end my video over here. I hope that you're going to keep liking our channel. Do watch, subscribe and comment on the video content as well. Thank you very much. I'll appreciate that you has just given us enough time. I thank you again. Thank you. Take care and have a nice day.